What's going on, my fellow wealth creators? Matty Ice here. Welcome to another training. Sorry if I sound a little off. I'm a little under the weather, still recovering. I apologize. But I really wanted to make this video talking about the difference between compound interest and simple interest. When I learned this, guys, it absolutely blew my mind. Number one, just looking at the numbers is incredible. But two, when you understand these things, it brings me to the second reason that I'm making this video is when you hear things that people say. Like, I was watching a YouTube video the other day, and there was this gentleman talking about why whole life is terrible especially for infinite banking, because you can pay 8% interest on your policy loan, but you only earn 4% in your policy. And it's a scam. It doesn't make sense, but blah, 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 whatever. And it's absolutely not true. Now, on the surface, it sounds like he's correct. Like, if I'm paying 8% interest on my loan, but I'm only earning 4 in the policy, why on earth would I do that? Well, number one, we're creating that arbitrage when we take the policy loan and put it into investment opportunities. I've talked about that extensively on my channel, where if I can borrow, let's say at 8%, and I flip a piece of real estate, or in my case, I flip heavy equipment, and I make 15, 20, 30% over here, well, it's kind of a wash, because everything I earned in the investment pays for the interest, plus my cash value is continuing to compound while I had the policy loan out. So that's a whole other part of the argument here. But just sticking to his point, where he's saying whole life insurance is terrible because of that scenario, you pay 8%, even though, like, right now my policy loan rates are 5.5%. But let's just stick with his example, and then we only earn 4%. Like, why on earth would anybody do that? I want to show you the numbers, guys, on why it absolutely makes sense. It's because we have the power of compound interest in our favor when we set these infinite banking policies up. It is absolutely incredible. All right. So I don't want you to be discouraged from moving forward with something that could potentially be really powerful for you, like infinite banking. Maybe it is, maybe it's not. But when you hear information like that, it's just a fundamental misunderstanding of how money works, like compound, the difference between compound and simple interest. And I just think it's bad, and it sucks, because it discourages people from potentially making a really good financial decision for themselves. So I want to clarify that. What we're going to do, I'm going to go ahead and share my screen, and we're going to pull up a couple of calculators and let the numbers tell us, is it as bad as this gentleman was making it seem? If I pay 8% and only earn 4 in my policy, which is, we don't set the policy up to get arbitrage inside of the policy. We use it. We want to utilize our policy, but is that accurate? Is that as bad as he's making it seem? So let's play with some numbers here. All right. So I have pulled up a simple interest loan repayment calculator, and I always like to use the example of when I first utilized my policy, my infinite banking policy. I purchased a vehicle for financial efficiency, eliminating opportunity costs, etc. It's a whole other training, but we're going to use a loan balance of $28,000. That's what I use. That's what I paid for my vehicle. All right, and let's use his exact numbers. All right, 8%, and we're going to do this over a 5-year time frame. Right, typical loan, car loan. Right. All right, now look at the numbers here. So in total, so the loan balance was 28. In total, we will have paid $34,064. We would have paid a total amount of interest of $6,064. Okay. Watch this, guys. When I go to a compound interest calculator and I plug in these same exact numbers within the same exact time frame, $28,000 for 5 years, earning only 4%. Watch this, guys. Look at what the number is. It's $2 more than, even though the interest rate is cut in half, we actually earn $2 more than what we paid with our car loan. This is the power of compound interest. And you want to know why this is the case? It's because with compound interest, the interest is being applied to a higher and higher balance, versus with simple interest, like a loan repayment, like we do with our policy loans, that interest is being applied to a lower and lower and lower balance. So you could pay double the interest rate and still come out ahead. Guys, we earned, what was the amount here? So we paid $6,064. We earned $6,000. We paid that in interest. We earned $6,066 in our policy. So is this as bad, nearly as bad as this gentleman is making it seem? Because this looks like a wash to me, even though the interest rate is half of what we're paying. Like, the interest rate we're earning is half of what we're paying, not to mention the tax advantages and all the other benefits that we're getting here. We're just talking about the interest rate. The numbers don't lie, guys. This is the power of compound interest versus simple interest, and one of the reasons why these policies are so freaking powerful, because we have the benefit of true uninterrupted compound interest. This is the power here of getting true uninterrupted compound growth, which is what we get inside of our policy. And these policies usually net 3 to 5%, plus all the other benefits that you get, plus whatever you use your policy loan for. Maybe it's not a vehicle, but maybe you're doing an investment opportunity, like I mentioned earlier. I'm like flip equipment and stuff like that. So if I can borrow, actually, you know what? I might actually let me share my screen one more time. Because watch this, like if we take what the actual loan rates are, it gets even better. Okay, so my current policy loan rate is 5.5%. If I recalculate that, the numbers get even better. So over the same time frame, now we've only paid $4,089 in interest, yet we still earned the $6,066. So we're actually ahead in our policy when we have better loan rate, when we have better policy loan rates. So that's I'll go ahead and let me go back to full screen here. I'll go ahead and wrap up with that, guys. I didn't want this to be a really long video. I wanted this to be as simple as possible, because these things really aren't that complicated. You have to understand how they actually work. That's all. And when you hear like this, I'm just tired of the bad information out there, people saying things where they don't really know what they're talking about, and they're not providing accurate information. Like when you look at the numbers, it actually makes sense to do this. So anyways, guys, I hope that was helpful. If you have any questions, drop them down in the comments section below. I'd love to hear your feedback. What do you think about this? I don't know. I'm a huge fan of compound interest. I don't know about you guys, but anyways, hope you guys are crushing it, and I will talk to you in the next one. To your success, Matty Ice is out.